This is Matthew Cratter from Trader University, and today I want to answer the question, is Bitcoin ownership highly concentrated? This is a question I've been getting a lot lately. It's interesting the way this works because the old FUD, fear, uncertainty, and doubt, was Bitcoin's only for people who want to buy illegal things online. It's going to be banned by the US government. And now that we see that these things aren't true, it's certainly not going to be banned by the US government, at least for the next 5 or 10 years. Now there's new FUD that now that Bitcoin has gone up a lot too, oh, I'm not going to buy Bitcoin because it's only for the rich, and Bitcoin ownership is highly concentrated. This is one of the strange things about Bitcoin is that if you don't want to buy Bitcoin, you're always going to be able to find a reason not to. Even if you're a really smart guy like Peter Schiff, who's been bearish on Bitcoin since it was just a few $100s. Meanwhile, gold has just stayed right around 1,700, and he has maintained his bearishness on Bitcoin from something like $200 all the way up to $48,000 today. This is why it's very important, if you're going to have an investment thesis, it needs to be falsifiable, as Popper would say, as Karl Popper would say. You need to have a way of knowing that you are wrong. It's funny though, because we never hear this with stocks. No one ever says, I'm not going to buy Tesla or Amazon because a few whales own it. A few whales meaning Bezos and Musk and some of the early employees. When they dump it, they're going to crash the stocks. In practice, this almost never happens. Large holders of stocks slowly sell their positions over a long period of time, and the ownership gradually changes from a few large whales like Bezos and Musk to many smaller institutional and even retail investors. Just a reminder that this is a problem. This is a modern problem. It's especially a modern problem, but even historically, wealth has always been highly concentrated. So I don't mean to write off wealth inequality. It's something I'm actually quite concerned about. In the modern world, there are two main reasons for this kind of wealth inequality. One is winner-take-all businesses like Google. As I've suggested in my other videos, Bitcoin is a winner-take-all business. It's not a corporation, but the store of its function as a store of value is a winner-take-all category. And the other driver behind modern wealth inequality is just the central bank money printing. Money printing disproportionately benefits those who own assets like real estate and stock. And so paradoxically, we're having the same cycle repeat with Bitcoin, where Bitcoin holders are becoming quite wealthy for both of these reasons. It's a winner-take-all sort of asset, and also the Fed money printing really pushes up the price of Bitcoin. Just a reminder here on President's Day in the U.S., in 2016 dollars, George Washington had a net worth of $587 million. Thomas Jefferson had a net worth of $236 million. Lots of times when we're reading about them, especially as kids, we don't quite realize not only how smart they were, but also how wealthy they were. And I'm not going to go into the source of their wealth. Obviously, some of these presidents held slaves, not trying to justify that at all. But this has been a historical problem. So let's turn to Bitcoin. This is the main article that people cite. I see this a lot in my comments, and it's always the same statistic. 2% of accounts control 95% of Bitcoin. This is an extremely misleading and badly written article, as I'm going to go through. First of all, there's no such thing as an account with Bitcoin. You can have an account with a cryptocurrency exchange like Coinbase or Gemini, but there's no such thing as a Bitcoin account. What you have instead are what are called public addresses. Public address is just something that looks like this. It's a very long series of letters and numbers, and these are used to send and receive Bitcoin. Now, it's important to realize, and the article doesn't really mention this, that one person can have many different public addresses on Bitcoin, on the blockchain. Also, one public address can contain the Bitcoin of many different people. What we know is that the public addresses that contain a large number of Bitcoin are often exchanges where people hold their Bitcoin on the exchange, and so the exchange has to put that Bitcoin in cold storage at certain addresses. And so lots of times these really large public addresses are companies, are the hardware wallets, or I'm sorry, the cold storage or the public addresses of Coinbase, Kraken, Gemini, and Bitcoin miners. The article I'm going to be using to derive my data was published by Glassnode. I'll link to it below. What Glassnode does is they do what's called chain analysis, where they actually look at Bitcoin transactions on the blockchain. It's obviously completely transparent, completely open. Anyone can do this kind of data analysis. It's beyond my own capabilities. Otherwise, I would have done it myself. But before we turn to that, I would just ask you, if you're finding this video helpful, to hit that subscribe and like button. So let's look at the breakdown of Bitcoin ownership. And again, I'm taking it from this article. Bitcoin miners, and these numbers are as of the end of January 2021. Bitcoin miners currently, or at that snapshot in time, own 9.7% of the existing Bitcoin. Now, Bitcoin miners will often try to keep a little bit to profit from the price appreciation of Bitcoin, but they also need to sell the bulk of their Bitcoin to pay electricity and equipment costs. There was a lot of FUD around a pool, I forget which pool, I think it was Ant Pool or F2, that was selling a lot of their Bitcoin a couple weeks ago. This is nothing to worry about. This is the natural progression of things, where these miners, they do have real world costs, especially electricity. And so they're doing an arbitrage. They try to mine a new Bitcoin and then sell it for a little bit more than it costs them to mine it. So Bitcoin miners currently own 9.7%. And these are not long-term holders. They need to sell this Bitcoin. Also, these things are not concentrated. The pools are concentrated, appear to be concentrated in China, but you can join a Chinese Bitcoin mining pool from anywhere in the world. That's another FUD talking point. Okay, so Bitcoin miners at about 10%. Exchanges, these are the Coinbases, Kraken, Geminis of the world. Now these numbers, so they own about 12.7% of the Bitcoin supply. These also do include those small holders who leave their Bitcoin on the exchanges. So this is misleading to think of Bitcoin miners or exchanges as being whales, simply because, especially for the exchanges, these are a lot of small holders who don't know how to withdraw their Bitcoin and put it on a hardware wallet like the Trezor. So instead they leave it on the exchange. Now this is a risky thing to do. You should always withdraw your Bitcoin. But some percentage of this, in fact, probably the bulk of the percentage, is small investors. Because if you're a large, smart investor, you're never going to leave your Bitcoin on Kraken or Coinbase or Gemini. Next category is really the whale category. The cutoff is often talked about as being 1,000 Bitcoin, which right now is worth about 48 million. So these are really large Bitcoin holders. 31.7%, almost 32% of the Bitcoin is in this category of whales. They sometimes called whales, sometimes called whales and humpbacks for the really large holders. What a lot of people forget, though, is that this category also includes Grayscale, almost certainly. We're not positive of this, but probably 95% positive that Grayscale GBTC, which is a trust that allows retail investors and institutional investors to buy Bitcoin in their stock brokerage account, they are a whale, but they are actually comprised of many, not just large institutional investors, but many of you I know own GBTC, a series of Bitcoin or a fraction of Bitcoin. Next category down is 50 to 1,000 Bitcoin, owned by about 23%, and then 0 to 50, or I should say, really, this is 0.0001 or something to 50 Bitcoin, owned by about 23% as well. So this is a far cry from 2% of the accounts control 95% of all Bitcoin, which is just some of the worst journalistic reporting that I've ever seen. Now, a lot of people will say, well, it's, I can't even afford a single Bitcoin. This will not matter because Bitcoin is divisible into 100 million sats, etc. But just to point out that it was possible for much of last year when I was talking about it, it was possible for small-time investors to accumulate at least one Bitcoin. Bitcoin spent some time below 6,000, a lot of time below 6,000, and certainly a couple days below 5,000 as well, just a year ago. So if you think of Bitcoin holders, even single Bitcoin holders, as being super wealthy, if you had $4,000, which is obviously, it's a lot of money in certain countries, not as much money in Europe or in North America. But even if you had $3,000, $4,000, $5,000, and you were watching my videos and you were paying attention to this stuff, you would have been able to accumulate a single Bitcoin. So many of these holders who own 1 to 50 Bitcoin, they bought them at much lower prices. And if they were smarter than me, they bought them even before 2019 and 2020. If we take a look at Bitcoin distribution by these different categories over time, this is what's often called a HODL chart. We can see here that there are these different categories. So they have very cute names here. A whale is 1,000 to 5,000 Bitcoin. A humpback is more than 5,000. These humpbacks will also include, obviously, companies like Tesla, which now owns Bitcoin, and companies like MicroStrategy. So it's important to think of humpbacks and whales as not just wealthy individuals or billionaires, but also these could be companies like MicroStrategy or also the Grayscale Bitcoin Trust. The smallest category here are called shrimp, less than 1 Bitcoin, so greater than 0 Bitcoin, but less than 1. Crabs are 1 to 10, octopus 10 to 50, fish 50 to 100, etc. And it goes up from there. The really light green up here shows the shrimp, which is less than 1 Bitcoin. And we can see that it has grown over time. The green patch here gets wider. Crabs have grown over time. Octopuses have grown over time, which shows that this is we're getting much wider distribution of Bitcoin over time. Now, let's aggregate some of these groups and take a look at it. The shrimp and crab, which are the small holders, are down here, this light green line. Their ownership in terms of the total supply on the y-axis of Bitcoin here has massively increased over time. And likewise, the category above them, the octopus and fish, which is 10 to 100 Bitcoin. And then this line here is the dolphin and the sharks, 100 to 1,000 Bitcoin. Now, obviously, when I first heard about Bitcoin, actually, unfortunately, I didn't buy it, but I could have bought. It was trading at $1 at one point, and so I could have bought, 1,000 Bitcoin for $1,000. And so some of these holders, they did not start out wealthy, but they obviously ended up wealthy. Finally, we have the whales and the humpbacks, which is this line up here. What's very interesting is beginning in about 2016, the whale and humpbacks sold off a lot of their Bitcoin into the huge price appreciation, certainly into the 2017 bull market, but then continuing into the 2018 and 2019 bear market. So there was a distribution here where whales sold them and retail investors, smaller shrimp and crab, picked up on them. And then what's happened recently is the whale category has begun to expand again, really since the beginning of 2020. One reason for this is that we've had for one thing, we had the large price crash in March and enabled some people to accumulate quite a bit. But the other reason is that we are seeing this pattern of corporations like MicroStrategy, Michael Saylor, Tesla most recently, and other high net worth individuals, billionaires like Michael Saylor. He bought Bitcoin for his own balance sheet before he bought it for his company's balance sheet. They have begun to accumulate Bitcoin and withdraw it and hold it in cold storage. And so what you really have here is a narrative where the original large holders begin to lighten up. Maybe they want to buy some nice cars or nice houses, and retail investors buy some of that. And then most recently, we've had an increase in whales as people like Michael Saylor and other billionaires and corporations begin to buy Bitcoin. At the same time, the shrimps and the crabs, their ownership has continued to go up as well. So this paints a very different picture, again, from what this article tries to portray, where there's this elite 2% that's manipulating Bitcoin. Michael Saylor and MicroStrategy, they've said that they'll never sell it. A lot of people are worried that this is going to be a pump and dump. And I think it's extremely unlikely, especially these corporate buyers. They buy Bitcoin to hold it for the long term, especially the very ideological ones like Michael Saylor and a lot of the high net worth individuals who've been buying Bitcoin. Finally, a final chart from the same article. This shows a cumulative change in supply ownership since 2017. And here we can see once again, it's very good news for the shrimps and the crabs. Their ownership has gone up a huge amount since really since the beginning of the 2017 bull market. And so their ownership has been rising throughout that bull market, throughout the 2-year bear market, and now continues to rise throughout in the 2020 and 2021 bull market. I wanted to thank all of you who upvoted this review on Amazon, and all the people who have bought my book and written reviews. I really, really appreciate your help with this. This, as I've mentioned before, I don't make a lot of money from books like this. This is more of a public service to get more and more people into Bitcoin. And this is one of the reasons that I spend so much time talking about Bitcoin on this channel. I want to see the shrimps and the crabs grow. The billionaires don't really need any more money. And eventually, Bitcoin will end up being highly concentrated, as most wealth is. The top 1% in the U.S. owns something like 30 or 40% of all the wealth in the U.S. And this is true globally. This is how power laws work, where 20% controls 80%, etc. It's going to happen again with Bitcoin simply because as more and more smart and wealthy people figure this out, they're going to accumulate as much as they can, all the way up to the pension, endowment, government, and central bank level. So these things, I would say that Bitcoin as a new asset has had the fairest distribution of anything in the world. You could have bought Bitcoin at any point in time. You didn't need to be especially rich. You did need to be kind of smart, maybe into cryptography or into really understand these things. I knew about Bitcoin from, I first heard about it in 2011, and it took me until 2019 to actually get it and buy it. So it's a long journey for many people, even people like me who had been in finance for 20 years before that. It was hard for me to wrap my head around it. And so this is a gradual process. But that being said, I would suggest that Bitcoin has had the fairest distribution, certainly of any currency or commodity in the world. And there's been this long period of time that has allowed small individuals to accumulate it. You didn't need a lot of money to buy Bitcoin back when it was $1 or $10 or $200. Bitcoin is still cheap according to all of the models I'm using. I'm projecting 200,000 Bitcoin by the end of this year. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.